a statistic, and I think that when I talk about this statistic, I get frightened. In the year 2000, the U.S. deficit.
What does it take to turn big dreams into a financial powerhouse? Larry Fink's journey from a kid in Los Angeles to the founder of BlackRock, managing more assets than the GDP of many countries, highlights a story of vision, innovation, and strategic brilliance in the global financial landscape. At its core, BlackRock is what we call an asset management firm. This means it helps institutions, governments, and individuals manage their money by investing it across a wide range of financial products like stocks, bonds, real estate, and more. BlackRock helps clients grow their wealth, plan for the future, and navigate complex markets. But this isn't just a small firm managing a few $1,000,000 here and there. We're talking over $9 trillion under management. Yes, trillions with a T. Think of it like this. BlackRock offers a massive supermarket for financial products. You've got exchange-traded funds, ETFs, which are like baskets of stocks or bonds that you can buy and sell on the stock market. They also manage mutual funds, which pool investors' money to buy securities. And then there are fixed income products, which are essentially loans made by investors to companies or governments. BlackRock has its hands in all these areas, and it's offering these products to everyone, from small individual investors to the largest governments in the world. But what sets BlackRock apart from other giants like Vanguard or State Street Global Advisors? For one, it's not just about the sheer size of its assets under management. BlackRock is known for its innovative use of technology, risk management, and more recently, its focus on sustainable investing. We'll get into all that in just a bit, but for now, it's safe to say BlackRock plays in a league of its own. Now, let's just talk about the man behind BlackRock, Larry Fink. Born in 1952, Larry Fink didn't come from a wealthy family or the corridors of Wall Street. He grew up in Los Angeles in a middle-class household. After studying at the University of California, Los Angeles, also known as UCLA, he began his career at a company called First Boston, where he made a name for himself as a bond trader. But here's where the story takes a turn. In the mid-1980s, Fink made a miscalculation that cost First Boston hundreds of millions of dollars. That failure could have ended his career, but instead, it lit a fire in him, a passion for managing risk. He became obsessed with understanding and controlling financial risk, and this obsession became the foundation of BlackRock. In 1988, Larry Fink and a few colleagues founded BlackRock. Initially, it was a small advisory firm that focused on managing fixed income securities, which are things like bonds. But from the beginning, BlackRock was different. Fink and his team weren't just interested in making money. They wanted to use data and technology to understand and manage financial risks better than anyone else. This focus on risk management became a key part of their DNA and set them apart from the competition. What does it take to transform a financial firm into a global powerhouse? Over the years, Larry Fink has surrounded himself with a talented team of co-founders and executives who helped shape the company's vision. People like Robert Capito, BlackRock's president, and Barbara Novick, one of the original co-founders, were crucial in building the company's reputation for smart, data-driven decision-making. Today, BlackRock's leadership team includes individuals who are not only shaping the company's strategy, but also having a huge influence on global financial markets and policy. So why did BlackRock grow so rapidly? Why did it become the world's largest asset management company? The answer lies in their obsession with risk management, their willingness to innovate, and their ability to take advantage of opportunities during financial crises. Think of BlackRock like a chess master. In chess, you don't just react to your opponent's moves. You plan several moves ahead, anticipating different outcomes and managing risks. This is exactly how BlackRock operates in financial markets. They don't just invest money and hope for the best. They use data, technology, and complex models to analyze risks, predict market movements, and make calculated decisions. This has helped them grow faster and avoid some of the pitfalls that other firms have fallen into. One of the key moments that propelled BlackRock to the forefront was the 2008 global financial crisis. While other financial institutions were struggling to stay afloat, BlackRock was in a unique position. Because of its expertise in risk management, the US government turned to BlackRock to help manage the assets of failing financial institutions. This not only solidified BlackRock's reputation as a trusted advisor, but also allowed them to expand their influence. But the real game changer for BlackRock came in 2009 when they acquired Barclays Global Investors, which included iShares, the largest provider of ETFs. This acquisition catapulted BlackRock into the big leagues. With iShares under its wing, BlackRock became the dominant player in the ETF market, which is one of the fastest growing areas in finance. Now you might be wondering, How does technology play into all of this? Well, BlackRock is not just a financial company, it's also a technology company. One of their biggest innovations is a platform called Aladdin. And no, it's not named after the Disney character. Aladdin stands for Asset, Liability, Debt, and Derivative Investment Network. In simple terms, it's a super powerful software platform that helps BlackRock analyze and manage risks across its massive portfolio. Aladdin is like the brain of BlackRock. It tracks and analyzes trillions of dollars in assets, helps managers understand risks, and provides insights into global markets. But here's the kicker. Aladdin isn't just used by BlackRock. Many of the world's largest financial institutions, including banks, pension funds, and insurance companies, also rely on Aladdin to manage their investments. So in a way, BlackRock's influence extends far beyond just the money they manage directly. Aladdin, BlackRock's powerful risk management and analytics platform, plays a pivotal role in the firm's success. Beyond merely having substantial capital to invest, BlackRock leverages Aladdin's sophisticated data analysis and modeling capabilities to drive informed decision-making. This technology enables the firm to assess risks, optimize portfolios, and identify investment opportunities that competitors might overlook. By integrating vast datasets and advanced algorithms, Aladdin empowers BlackRock to navigate complex markets with agility, ensuring they not only preserve client assets but also generate superior returns. Ultimately, it's this strategic advantage that differentiates BlackRock in a competitive landscape. But when did BlackRock officially become the largest asset manager in the world? Well, it was a gradual process, but a few key moments helped cement their position. In 2009, after acquiring Barclays Global Investors and iShares, they were already on track to become the biggest player in the game. But it wasn't just about size. They continued to grow by expanding internationally and making strategic acquisitions. They opened offices all around the world, from Europe to Asia and Latin America, giving them a truly global presence. One of the things that set BlackRock apart was its ability to navigate different markets and economies. Whether it was investing in technology in Silicon Valley, infrastructure projects in Europe, or renewable energy in emerging markets, BlackRock was always looking for the next big opportunity. Today, they are heavily invested in sectors like technology, infrastructure, and renewable energy, which are all areas with significant growth potential. It's also important to understand the principles that guide BlackRock's strategy. At the heart of everything they do is a focus on balancing risk and return. They are incredibly disciplined when it comes to managing risks, and this has helped them weather financial storms that have taken down other companies. But in recent years, another principle has become central to their strategy: environmental, social, and governance (ESG) investing. BlackRock has made a big push into sustainable investing, and they are one of the biggest advocates for ESG principles in the financial world. They believe that companies that prioritize environmental and social responsibilities are better long-term investments. This focus on sustainability has not only helped them attract clients who care about these issues, but it has also positioned them as a leader in the global movement towards more responsible investing. But let's bring this back to the average investor. How does BlackRock impact everyday people like you and me? Well, one of the ways is through their iShares ETF platform. ETFs are a fantastic tool for individual investors because they allow you to invest in a diversified portfolio of stocks or bonds without having to pick individual companies. BlackRock's iShares ETFs are some of the most popular in the world, and they've helped democratize investing by making it easier and more affordable for regular people to get involved in the stock market. And here's another interesting fact. BlackRock has been instrumental in keeping management fees low. In the world of investing, fees can eat into your returns, so keeping costs low is important. While BlackRock isn't always the cheapest option out there, firms like Vanguard are known for their rock-bottom fees, they've certainly played a role in driving costs down across the industry. If you enjoyed learning about the fascinating rise of BlackRock, don't forget to like this video, subscribe to the channel, and hit the notification bell to stay updated on more in-depth stories from the world of business and finance. Thanks for watching.